David, thank you so much for coming on.
I love being guests on podcasts. I appreciate the opportunity. I host the Weekly Wealth podcast, but I love also just being on other shows. I love seeing how other hosts run their technology and really just getting the word out about all things financial. Because I believe that how we handle our money and our assets really should just positively impact our lives and the lives of those around us. And certainly real estate is can be a big part of the financial wealth building process.
Yeah, absolutely. I mean, it's been a big part of what I've done in the past 4 years. So can you tell us a little bit about yourself and your background?
Yeah, so I am a certified financial planner. And what that means is, very generally speaking, I work with clients to help them to make what they want to have happen with their money have the best chance of actually happening. So we look at a planning process, we look at projections, we look at what behaviors does our client need, and we help them to make a plan. And this might include having the right insurances, it might include having the right amount of life insurance in case you didn't make it home today. It might include helping our clients to own the right stocks, the right bonds, the right ETFs. And it also certainly could include advice on real estate purchases and rates of returns and cap rates and things like that. So ultimately, we're all better off. We're better people. We're better husbands. We're better fathers. We're better parents. We're better leaders when our money is under control. I don't know, John, if you've ever had a period of your life where just money wasn't plentiful, whether it was your fault or just circumstance. And then if you've had other periods in life where money was more plentiful and handled better, and
Mhm.
just strictly speaking, when money is handled better and more plentiful, life is easier. I don't like money stress, and I really try to help clients to eliminate money stress to the extent that it's possible.
Yeah, 100% agree. I think one of the things that stuck with me from, I think it was middle school or high school, was that I think the number one thing that, or number one or number two, um, topic that most married couples argue about is money. And so because that's always kind of stuck in my head.
Well, and it's not always the quote poor people that argue about money.
Mhm.
Oftentimes, I have a few higher net worth client, higher earning clients. One that makes about 800,000 a year, and his exact words were, "We're always stressed about money." So that's not a lack of money. That's
Mhm.
you know living too extravagantly, and where I live, that is a whole lot of money, and you really, realistically speaking, shouldn't have any financial issues with that amount of income. So sometimes it's where's the money going? Sometimes
Mhm.
it's, are you keeping up with the Joneses? Sometimes, would the $600,000 house suit you just as well as a $2 million house that you can barely afford? And a lot of those types of decisions.
Yeah, 100%. Um, One of the things that you mentioned is you kind of take like a holistic approach to couples or I guess an individual's financial situation. One of the things that I've heard is from Grant Cardone and Dan Martell, you pick one thing and then you go all in. And then once you've succeeded in that one spot, you kind of then diversify. Is that what you're seeing, or what is your thoughts on that? What are your thoughts on that?
Well, I think that when I go and meet anybody new and they say, "What do you do for a living?" And I say, "I'm a financial advisor." Almost every time they'll say, "Well, hey, should I buy Nvidia? Or if I gave you $100,000 now, where would you invest it?" And my
Mhm.
answer always is, I have no freaking clue where you should invest your money. Let's say
Mhm.
hypothetically you have a bunch of debt that you need to pay down, or let's say, so I don't know anything about you, so I can't give a advice on like where to invest.
Mhm.
Um, but from my point of view, it's the plan itself that you need to be totally all in on. So
Mhm.
again, that might be, I don't know anything about you, John, but there may be some amount of life insurance that's really necessary in your life. There may be some tax strategies that may be very necessary in your life. Now, do I think you should only own real estate or only own Nvidia or only own any one type of asset? I don't think that's the case. I think that some diversification, and I know Grant Cardone has a little bit more money than I do, but I would argue that going all in on only one thing, yeah, it might give you that like I don't have any option to let it fail type mentality. But I
Mhm.
also think that there are times in history that one segment of the economy, whether it's real estate or any stock sector, doesn't, has a really bad period. So I would argue that a little bit more diversification is a good thing, but certainly having a specialty. I mean, I have clients where a lot of their net worth is in real estate, and
Mhm.
I don't have an issue with that. I think every asset type has positives and negatives, and certainly real estate has a lot of positives. But just one negative in theory is I own the building that I'm standing in right now. If I needed money from the building, I couldn't get it today because it's not a liquid asset. So,
Mhm.
having some other liquid assets available certainly, should be part of a general financial plan. So I do think that diversification is a really good thing. But I also think that having some sort of a specialty or some sort of a go-to is not horrible either.
Yeah, that's a good answer. Um, so I appreciate that. Thank you. Uh, One of the things that we were talking about before, I guess the pre-show is children. So I have two children, and I want to make sure that I can set them up for financial success or just success in general. Um, what are some of the things that I can do now that they're young to help them, I guess, have more options in the future?
Sure. So, one of the things that I think is hugely important is on an age appropriate level, always make sure that you're talking about money with your kids and give them some financial decisions to make.
Mhm.
So, as your kids get to an age where it's appropriate, instead of buying them a toy, maybe give them money and they get to pick which toy they get and understand what the toy costs, and also understand if they don't buy the toy they get to keep the money, or if they buy a cheaper toy they get to keep the difference, and just allow them to make those decisions. Talk about how much things cost. Talk about, hey, we just ate at Chick-fil-A. How much do you think this chicken sandwich costs? And just have them understand what money is. Most salary knowledge that people have, that kids and teenagers have, is just how much money LeBron James just signed for, or how much money your favorite quarterback signed for. That's,
Mhm.
I don't know about you, but that's not my reality. $20 million a year, $50 million a year. But kids will hear that and think, everybody gets $10 million or 5 million or 20 million. And that's not reality.
Mhm.
So the first thing I think is to talk to kids, of course, at an age appropriate level about money, give them some responsibilities. And then when they're able, talk about, what general earning rates are. And if they want, when they become young adults, to live the same lifestyle that they're living now, how much money do you have to make to live in a house like we live in? How much money do you have to make in order to buy the cars that we own? And the answer may surprise them on, they may have to dial back their lifestyle for a little while until they earn more money and build more wealth, or they may just have to simply make themselves very valuable so that their compensation will be high. So that's like the first thing. That's, to me, just the basis of it is teach them, right? I mean, we have to teach our kids about the things that are important, and money certainly is one of them. That's
Mhm.
that's important. Now, beyond that, one of the things that we did is when our kids got their driver's licenses, we made them an authorized user on one credit card. Now, it's a Bank of America credit card. It's the red one. So all they know is they have a red credit card, and they
Mhm.
have permission from us to buy gas with that credit card. They also have permission to buy what we give them permission to buy. So, hey, on your way home from school, can you swing by the grocery store and buy some milk? Or out, just use the red credit card. And they can do that. Now, in theory, as an authorized user, they could max it out and we'd have no legal recourse. Now, we could potentially use violence against them, but this card, I don't know if it has a 30 or 40 or $50,000 limit. They could, in theory, go
Yeah.
buy $50,000 worth of stuff, and it would, we'd have no recourse. But what they now have is they have 100% paid history on a credit card. So our oldest, from age, 15 and a half or 16 to age 18 or 19, when we got to the deal that you and I are going to discuss, and his credit needed to be run. It was a 750 or a 780. So at 18 years old, he had, a credit score that's higher than what most adults have, and that's simply because he had a credit card where he was a user, and he had a perfect history on it. So now a pro tip on that is the kids don't even need to know that the credit card exists. So if you don't trust your kids, they don't need to know about it. As long as it's there and you use a little bit and then pay it off. And then on the other side, if you get in a position where you just financially can't pay that credit card, just understand that it'll negatively affect your kid as well if that card is not dealt with properly. But that's a really good hack on how to start your kids off with at least a decent credit score when they become young adults.
So I have a question about that because I set up my children at I think very young ages before they even could talk as authorized users on my credit card, but I'm not using that particular card. I just assumed that because they're linked to that my credit card, that would translate to them having a perfect record. But do I have to
Yeah,
use those
credit
cards?
scores are like this incredibly complicated formula that I don't think anybody understands
Hmm.
fully, but there are parts of the formula is how much available credit are you using? So if they're using none of the available credit, it's not maximizing. So I would use that card somewhat and then pay it off every month, and I think that would have a better effect on their credit report because ultimately they're not developing a payment history because that card is not being there are no payments on it.
Uh, but so it's linked to my personal card, so I'm spending using that
Oh yeah,
card.
yeah, yeah, yeah. No, that's
Okay.
fine. Yeah,
Okay, good.
absolutely. Yeah,
Because I was
yeah.
gonna have to go, they have a bunch of cards everywhere. I was gonna have to go dig into and try to find those particular cards and swipe
Nope.
them.
To my knowledge, it's the account, not the card. So
Perfect.
yeah.
Okay, good to know.
Mhm.
Great. So, how did you take advantage of having a really good credit score for your son?
So back in 2020, you remember what the world was like in 2020.
Hmm.
Uh, and even besides COVID and masks and everything else, there were these interest rates that were like 2% or two and a half
Yeah.
percent. So
Hmm.
our son, we live in South Carolina. He got accepted to University of South Carolina. So we moved him down to the dorms in University of South Carolina. And one of the things that I believe with college is it's a financial decision, right? So we chose a school that's a state school, so tuition is manageable. But the dorms, I forget what they were. They're 700 or $800 a month. It was, a good chunk of money, and it was literally not as nice as a jail cell. And there was a cinder block dorm room, and then like a connecting bathroom, and then another cinder block dorm room. So there are four 18-year-old boys
Hmm.
sharing one bathroom, and they would literally complain that there was mold in the bathroom. So imagine teenage boys being away from home for the first time in their lives. They're disgusting pigs anyway, and they're
Hmm.
complaining how dirty the bathroom is. So that means that it's
Must have been bad.
not awesome. So what we started thinking was in that school, you have to live in the dorms in your freshman year. So that's fine.
Hmm.
But what are some options? Like, how can we maybe creatively figure out a way to get housing for him? So we looked at apartments, and apartments, I don't know what the number, anywhere from 600 to 1500 a month. And, that's still a good chunk of money. So then we said, well, when they say the rich get richer, and there's many different definitions of rich, but one of the things that the rich do is the rich take advantage of opportunities, and the rich buy appreciating assets. Let's look around for homes. Like maybe there's a chance that we can buy a home and turn it into a rental property. So we drove to Columbia, about 2 hours away. Actually, one of his friends, still in college, was a real estate agent, which I was a little bit worried about, but he
Hmm.
actually did a really good job, and I have some experience, so I knew what to look for. We looked at homes, and the market at the time allowed us to purchase a home. We put 20% down, which another thing, when the rich get richer because they put themselves in a position to take advantage of opportunities. So we put 20% down. We bought a home, a 3-bedroom home. And the short of it is it costs us, because thankfully the interest rate was really, really low, about $800 or $900 per month to own the house. We rent 2 bedrooms out to his friends for 600 each. So we have a positive cash flow of 300 or $400, which of course goes back into the bucket to fix things and
Mhm.
but if we didn't do this, we'd be paying $600 to $1,000 a month for rent for him to live in an apartment somewhere.
Right.
So at the very least, if it's a wash every month, it's saving us $600 to $1,000 a month, or we're making $100 or $200. And then, according to Zillow, the house has gone up by 50 or $75,000. So who knows how accurate it is? But the house has definitely gone up in value, and the
Mhm.
mortgage balance has gone down. And the mortgage balance has not gone down because we've been paying every month. It's gone down because our tenants have been paying every month. And they're also, I feel like, getting a slightly below market deal on their rent. So it's been a win win for everybody. Now, the cool thing is our son um, is listed on the deed as one of the 3 owners of the home. So that did a couple things. Number one, it allowed him to go through the house buying process. So at the age of 18 or 19, he got to go to the attorney's office and he signed every piece of paper that I did. And I know if you've been to loan closings, you sign your name a bunch of times.
Yeah.
He had some input on how much money we should offer for the house. He actually had to um, uh, uh, he's on the mortgage, so he had to fill out his little part of the mortgage, and I think he made $1,200 at a summer job, and that was kind of factored into the income. But he got to see the whole process of buying a house, which
Mhm.
I think is a beautiful blessing for that.
Yeah.
And then also, with the house being partly in his name, so he's an owner. He lives in the house. So it's an owner occupied house, which means that the property taxes are next to nothing. Whereas if we owned it and if he were not on there, then it would technically be a rental property and property taxes would have been several $1,000s per year more. So a couple hacks there that I think worked out really, really well. And also he feels like we kind of joke he's the property manager. So I'm sure he's having lots of college fun, but he also has that little extra job as has to make sure that the house that he's a third owner in doesn't get burned down in some raging college party either. So it's been a really cool thing in a lot of different ways.
Yeah, I think there's a lot of things to unpack here. I mean, first, he's got responsibility because he owns
Hmm.
that house. So he
Hmm.
can't just go and trash it by inviting a bunch of people, or he can invite a bunch of people over, but he has to make sure that people are being respectful of the home.
Hmm.
That's one thing. The next thing is having to go through all of the lender verifications and submitting paperwork. That is not an enjoyable experience, but it's just something that I think is important,
Yep.
right? And then also just having that responsibility, I think is really, I mean, at that age, I wasn't doing anything other than just messing around like that. So that's,
Sure. But I think what you expect from young people is what you get.
mm,
So if you expect, hey, just all college kids drink all day and wake up at noon, and that's kind of what they're going to do. But if you expect, hey, we're putting you in a position to where you're going to graduate without loans, and there's this house, and the house is nice, but it's certainly not a mansion. It's just a little brick ranch house.
mm,
But hey, your job is to cut the grass. We're not paying someone to cut the grass. So while other kids
mm,
might be still drunk on a Saturday morning, that's
yeah,
cool. Either you're still drunk cutting the grass or you need to be sober cutting the grass, but you're cutting the grass. And that's um you know I think that's a great piece of responsibility to give your kids.
yeah. Uh, was there any work that needed to be done in the house, or was it turnkey?
Very little work that needed to be done, but he is pretty handy. So he changed some light fixtures. But actually, last year, very coolly, we put up a fence to kind of make a smaller part of the front yard, and he set all the posts by himself, which actually that's kind of needs to be pretty precise.
Wow.
And then we built a fence. So, in addition to our family building our net worth by that value of the house increasing and the loan value going down and the
Hmm.
experience, he also has been the handyman. So built a fence, pressure washed the deck, couple new light fixtures. So yeah, there was some stuff to be done, and I can definitely see house flipping in his future at a point. I think that would suit his personality.
Yeah, that's amazing. I mean, to be able to do that, you work with your hands. Like if I try to set a fence or try to build a fence, like, it would not work out very well.
Yeah, and the fence is still there. It's been 6 months, and it still looks good. So
There you go. So a question about the property taxes, because this is something that I learned when moving down here to Florida. Um, Owner occupied, you get a cheaper rate for your property taxes. Do you have to do any kind of filing or any kind of submission to the state to say, or locality that says, I'm living here, please don't raise my property taxes above a certain amount or anything like that?
There was some paperwork that the closing attorney helped us to handle and file. I'd be lying if I told you I knew what it was, but
Mhm.
there was something that we had to file, I believe, with the county tax office to verify that the owner lives there. I think it's 51% of the year, even though he lives there all year, other
Mhm.
than summer. So yeah, there was some paperwork that had to be done.
Okay. Kind of funny that it's Columbia, South Carolina as well, because I was looking at that market, I think a year and a half ago, 2 years ago. And I think there's a lot going on for that market. The colleges, obviously,
Mhm.
but then I think there's large hospitals there and a military base.
There's a military base, and Scout Cars is opening up a huge factory that's going to bring thousands and thousands of jobs. So it's an up and coming area.
Mhm.
The other thing is, I don't know if you're into college football, but some of the bigger schools, like literally the economy of the city gets better when the football team is better. And in some ways it's crazy,
Yeah.
but South Carolina is, the team is kind of on the up as far as the football team. So that
Mhm.
literally is going to have a positive effect on real estate values, which is nuts. But but it certainly is. So good area though, and it worked out numbers wise to where we could buy that house and have a little bit of positive cash flow. But even if we were flat on cash flow, or even had a little bit of negative cash flow, it would
Mhm.
still be a good deal. Now there's another school near us, Clemson, and with the way the real estate prices are, a deal like that just literally wouldn't work. I mean, you'd be in the hole every month. But you'd still be
Mhm.
building equity, so it still wouldn't be the worst thing ever, but it wouldn't be quite as positive financially as our deal.
Yeah, and I think that's one thing because I've bought a bunch of doors, and that was my main business was to go out and just buy rental properties, long-term rentals, nothing crazy, nothing special. Um, and it's great, but the cash flow isn't. It's hard to live off of 300 to $400 a door, even
Sure.
if you have a
Yeah,
bunch of them.
absolutely. You need a lot of those. And so, but you also have to look at what are the liabilities of what we did, right? I mean, obviously, number one is people can't people could not pay their rent. Well, if that happened,
Mhm.
it would be, you know, we were gonna have to pay rent for him anyway. So it
Yeah.
would stink, but we
Mhm.
could handle it. But number two is, there's damage and there's liability. So whenever you're buying a rental property, I mean, people can damage it, and you know, just because you take them to magistrate court doesn't mean you're going to recover anything. And then
Right.
there's also just liability. I mean, what if a bunch of idiot college kids get drunk and somebody kills himself or falls down, or so there is some liability involved. So, you definitely want to make sure that you have, adequate liability insurance for sure anytime you have any exposure at all. But I think that having um just make sure that you're talking to your insurance agent about what are the ways that I can have adequate liability insurance for the things that potentially could happen, because things happen.
Yeah.
You may think that they won't, but they can.
Yeah, absolutely. So is it like a type of umbrella insurance that protects you as technically like the landlord, or how does that work when you're renting out parts of the house that you're living in?
Yeah, so in our case, just a personal umbrella policy is extending coverage. So a couple $100 a year for $1 million or $2 million of additional coverage. Well worth it for sure.
Yeah. So
And well, I was just gonna say on a side note, um, from a financial planning standpoint, most people are really, really concerned with, like, how do I build wealth? How do I buy properties? How do I buy which stocks I should buy? And
Mhm.
all of that is really important, but everybody needs a great relationship with an insurance agent who's local and independent, because as fun it is to build wealth, it's much easier to protect it. Okay. So if you have, let's say, hypothetically, minimal car insurance, and you just make a mistake, you run a stop sign and you T-bone my car with my wife and my three kids, and we're all severely injured, that could go into the millions of dollars very easily. And
Mhm.
then boom, there goes all the rental properties that you bought. I now own them once I sue you.
Yeah.
Whereas, maybe two, three, four, $500 more a year on your insurance costs. Now your insurance company would be paying my damages as opposed to you personally. So make sure all the listeners are dealing with risk management. It's like not sexy, it's not fun, and it almost seems like you're paying for nothing because you're giving an insurance company money in the exchange for their promise to pay for your damages. But
Yeah.
trust me when I tell you, if those damages ever come, you would much rather have an insurance company pay millions of dollars than you yourself.
Yeah, that's a really good point. I mean, one of the things that when I first got started in real estate, it was always about the next deal and the next deal. But at some point, you got to take a look at the organization itself and say,
Hmm.
well, okay, well, how can I be attacked and how do I protect myself? How do I
Hmm.
maximize what has already been built?
Yep.
Um, yeah. So just out of curiosity, once your son graduates, what's the plan with the house? Are you going to hold on to it, keep it as a rental? What are you going to
Well, interestingly, we have twins that are seniors in high school this year,
do?
and they actually both got accepted to University of South Carolina. So more than and they'll have to live in the dorms for a year. So more than
Mhm.
likely, we're going to find just two students and rent out two rooms. We'll have to deal with the residence issue. I believe that our oldest will be there for more than half of a year because he won't graduate until the summer. So that
Mhm.
should satisfy that.
Yep.
And then yeah, once they're ready, once they're in their second year, they'll move in and we'll probably rent out one room. So we probably won't have positive cash flow, but it'll still be better cash flow than paying for two apartments to rent, for $1,200 each. So
Yeah.
and then after that, I don't know. What do we do? Do we Airbnb it on football game weekends? Do we rent it out to students indefinitely? Do we sell it and cash out? I mean, the beautiful thing about making good financial decisions is it creates options. So we'll have the option to again sell it and cash out. We'll have the option to Airbnb, which everybody. I don't know what your feelings are. I think Airbnb potentially can make a lot of money, but I think there are also risks and work, or
Mhm.
we could long term rental it to students. Each one of those are potentially a great option. So I'd much rather have that decision than no house at all and no asset.
Yeah, for sure. Um, just out of curiosity, so with the house, I mean, it's three bedrooms, and I'm sure there's a dining room, there's like living space, common area. Have you ever heard of co-living?
Uh, I don't know much about it, so I have a feeling I'm about to. Let's hear it.
Okay. Well, because what people will do is they'll buy like a 3 or 4 bedroom home, and then they'll convert the living room into a bedroom. They'll convert the dining room into a bedroom, the garage into 2 bedrooms. And so they'll turn a 3 or 4 bedroom home into 8 to 9 bedrooms. And so I just remember even now, like we don't even use our dining room. It's to
Sure.
me just useless space. Actually, I converted it to a gym. Um,
Yeah.
so was
Yeah.
just curious to see if you had ever thought about converting the dining room into another bedroom and turning it into 4 bedrooms instead of just three.
Hadn't no, but I think that that could potentially be a possibility. And then another whatever that bedroom would rent for would be a
Mhm.
would absolutely be more cash flow for sure. So cash flow
Yeah.
is a good thing.
Yeah, absolutely. So just a curious thing about student housing. I've heard a lot of good things about it as long as you do it properly. So when a student comes in, are they getting co-signers like their parents co-signing for these agreements?
So these particular tenants were friends. So we did have an official lease that was drawn up by an attorney. So an actual lease, not just something downloaded off the internet that we thought was a good lease.
Hmm.
And they were over 18. So they signed the lease,
Hmm.
which, obviously they don't have any assets or anything.
Yeah.
We didn't feel like having a co-signer was necessary. And we also, since it's not a full apartment complex, if they both moved out, then we'd have, $1,000 per month expense, which, stinks, but we could handle it.
Right.
So, did not have a cosigner, but we certainly did have an official lease that spelled out rules when things are due and late fees and things like that. Because I do think that it might be tempting to have a scenario where there's not rules. And I think you got to have rules and expectations, and that's where the lease comes into play. And of course, having an attorney guide you on what's legal, what's not legal, and things like that is super important. So sometimes you got to spend some money on attorney just as another way of protecting yourself.
Oh yeah, for sure. Instead of just was it Rocket Lawyer or something
Yeah,
like
yeah,
that.
yeah, yeah. Chat GPT, draw me up a contract.
Yeah. Um, Cool. So, I mean, it's a very interesting way to approach this. And I've heard, some people will buy houses as soon as their child is born and then use that to pay for college in the future. This is another route that people can go if, they're starting a little bit later. And, that's completely fine. You're doing something right if you're able to go out and buy property when your child goes off to college. How did you get into this world of finances? What did you go to school for? What made you interested in finances?
So that's a really interesting thing. Grew up, I didn't realize we were poor until I got older. And like, yeah, money was always a limiting factor. Um, so, but then I remember getting into teenage years and you're like, well, not everybody's parents are limited. Like some kids just buy stuff and if they need something, there's money. So it was kind of fascinating to me that money could be something that could become plentiful and it could be, um, available. So when I was going to school, I remember listening as I was driving. I didn't live on campus to a talk show called Money Talk, and there was a guy named Bob Brinker, and he would talk about stocks and bonds, and he would talk about people would call him and say, "Hey, should I buy this stock?" And he would look up the price, and he was like, "Well, it was $20, now it's $100, so you'd have an $80 gain." And I started thinking, this is fascinating. Like you can buy something, and then later you can sell it for more. Like what the crap? Like, how does that work? Because that wasn't something I was, around. And the same thing would hold true, obviously, for a property. You could buy a property and then sell it for more. So
Mhm.
I got really fascinated with money. But also I was fascinated, I've always had jobs where I had some control over income. Never really had a salary job where it's just a salary and nothing else. And I always wanted to be in a position where if I did the smart things, I could make more money. So fast forward a few years, I had the opportunity to become a financial services rep at a small insurance type office. So I got some of my licenses and um, began to really learn and dive in. And then I had an opportunity to buy my own office and do a lot of different things. So and we're hitting the 20-year mark pretty soon. So I was fascinated with the fact that some people are, quote, always struggling with money. Some people are not. And a lot of where we end up with our money, not all of it. And I say that with respect and sympathy because sometimes life does not go your way. But if you're in your 30s and 40s and 50s and 60s and life has never gone your way, it's probably not life. It's probably maybe there's some just different decisions we can make, whether it comes to making ourselves more valuable so our compensation can be higher, or taking some risks, maybe buying some real estate, um, or spending less money. I mean, there are a lot of different things that we can do from a behavior standpoint that over time, like not by tomorrow, but over years, our financial positions can greatly improve. And again, if you're listening to the podcast and you're struggling financially, this is not a judgment. This is not you're a bad person. It's just, I think that we all need to look and say, what can David do to help David's financial situation? And I think if we're doing that consistently, over time, our financial situations are going to improve. Can't fix the past if you've made some financial mistakes. If you didn't come from money or if you didn't understand money in the past, that's all fine. We've all been there. Trust me,
Mhm.
I've been there.
Yeah.
But, like from this moment forward, it's like, what can I do? What are some of the small things I can do every day to get my financial situation to where I want it to be? And then just do it. And you take a step forward, 2 steps forward, a step back, 3 steps forward, 2 steps back. But little by little, you start to get there.
Yeah, that's a couple of things. Taking the emotion out of it and looking at a pure like numbers base, I think is really important, right? Why am I buying these luxury things if I'm struggling? Does it really serve me? Is it really helping me? And then another thing is, um, yeah, changing how you make decisions. I still go through this where things aren't the way that I want them to be. So then what decisions am I making that cause me to be put in this situation? And then how do I avoid these by making better decisions? Like, what is it that I have to do different? Yeah, really good points.
Yeah, and one of the things that I tell all young people is a reality that I don't even necessarily like, but I believe it's a reality, is that we're all paid based on how easy it is to replace us.
Mhm.
So, if I needed brain surgery, I could call you. You're not capable of doing brain surgery on me, I don't think. And that's why
Nope.
brain surgeons make a lot of money.
Yeah.
Um, we could say, Michael Jordan, LeBron James, any of those people, they don't really deserve $30 million a year. But until you have 30,000 people paying hundreds of dollars each to watch you do your job,
Yeah.
they've just put themselves in the position to where the market dictates that it would be really hard to replace LeBron James. Now, let's go to
Mhm.
the other end. Let's say you're a cashier at a fast food restaurant. That's not that hard to replace. Doesn't mean that you're a bad person. It just means that the skill level, there's not an exclusivity there, and it's relatively easy to replace. That's why that position doesn't pay more. So, whether you run a business or you have a job or you're buying properties, like it's hard to replace someone who owns a bunch of properties. That's where compensation increases. So, I just think that that's a really good lesson for everybody. Is make yourself, and sometimes that just means doing harder work. Like some of those manual labor jobs that are no fun, they pay decent amounts of money because it's hard to find people that want to do dirty work.
Yeah.
Or it could mean just have a skill. Learn how to do brain surgery, then you'll get paid more. Or but if you're in a position to where it's very easy to replace you, you just simply don't get paid that much money. And it's just a I don't even like that reality, because it means I have to be hard to replace. But I think
Yeah.
it's a reality nevertheless.
Yeah. Excellent point. I mean, I've seen other people say, "Oh, how do I make more money?" Well, accumulate more skills and then become
Mhm.
more valuable to the marketplace.
Yeah.
Yeah. Well, David, I appreciate you coming on. How can people reach out to you and how can people work with you?
So the easiest thing is either go to www.weeklywealthpodcast.com or just find the Weekly Wealth Podcast on Apple, Spotify, those kind of things, and listen to the show. We talk about the mindsets, the tactics, and the strategies that can help you to build and maintain wealth. I would actually love to have you come on and talk about some real estate wealth building tips because I think real estate is a great tool. And
Yeah.
yeah, we just try to put people in a better position, working with the mass affluent and the high net worth primarily, better position with their money. And then if you ever had any questions, you can just email David at parallelfinancial.com. And I'm always happy to spend 30 minutes with anybody and point them in the right direction. And yeah, so it's pretty simple stuff. Check out the Weekly Wealth Podcast and let me know what you think because I put out an episode every week and it's really, really a labor of love for me.
Yeah, absolutely. We'll have those in the descriptions just to make it easier for everyone to find you. Yeah, we'd love to come on and share my experiences with real estate as well. Thank you again for coming on. It was great meeting you.
Absolutely. I enjoyed being on here and yeah, go buy some real estate, go make some good financial decisions.
Yeah, absolutely.